Today, we would like to talk to you about the future of our monetary system and the dangers associated with the launch of the digital euro. We are standing at a crossroads now to decide how money will work in our future generations. This leads us into the topic of who owns our money right now. If we look at who owns our current paper money, it will always be the state itself. The state will put an institution in charge of printing our paper money and distributing it. This is a pretty good deal for the state, since it has the production costs of only a few cents to mint a 100 euro banknote. Like with every good sold, this means the producer owns the product until it is sold to the customers. But it cannot print money just like it wants. It needs to be aware of inflation or deflation of its currency. To have an eye on those effects, institutions like the ECB are charged with monitoring inflation and deflation and adjust it according to a set of rules. The ECB is supposed to keep the inflation rate at around 2% in the EU. This is the ECB's only mandate. They can take steps to ensure this number, like we have seen in the past couple of years, by lowering the amount of interest banks pay to lend money from the ECB. But these tools can be seen as a blade that gets more dull after every use. In essence, the ECB cannot take money out of your wallet actively, but they can do it passively by lowering the value of the money you carry. But what if they could just take the money directly out of your wallet? Is the digital euro the beginning of direct control from the ECB? Let's explore those questions in a bit more detail. Your personal positioning towards a digital euro managed by the ECB. We will share with you how money is handled in our daily lives and how the form of money is changing. We will also share with you our opinion on the digital euro that is currently designed by the ECB and the risks we identified with the central bank digital currency. See this video as a kind of mental preparation of how a future with a digital euro managed by the central banks could look. Don't forget to like this video and subscribe to our channel so that you will not miss our latest editions about the worrying side of the banking industry. As always, all of our references can be found below this video. COVID has highlighted that our world can be run from our homes with a touch of a few keys. A world that has managed to run online is feasible for a major part of our life. A large part of our work can be done in a digital way without commuting to the office every day. Shopping can be done without even going into a store, and talking to our friends and family can also be done in a remote way without meeting face to face. More and more parts of our life are transitioning into a digital form. As a society, we are getting more and more used to the idea of working in a fully digitized environment. Next to working, shopping and spending time with our loved ones, paying for goods and services is another normal daily activity. Money has also transitioned into an online form some time ago. Hence, we do not need to carry lots of cash around with us to pay for things, but we can use our bank balance for transactions. We have our bank cards instead of physical banknotes, which allows us to pay without cash. It has become normal for us to put our bank cards into a card reader, insert our code, and the money gets transferred without actively handing over banknotes to the cashier. When we get paid, money gets directly transferred to our bank account. Hence, our employer doesn't need to physically hand over our pay in the form of banknotes. Instead, we receive our salary automatically on our digital bank account. These examples highlight that we have already left the physical and material world of money in terms of banknotes some time ago and have moved on to digital. Today, we have the option to either use cash or pay with cashless. Next to cash and the electronic form of the euro that we have on our bank accounts, a new form of money is entering the scene: cryptocurrencies. The logic of cryptocurrencies differ from the logic and structure of our euro. Cryptocurrencies are, as of today, not managed by the central banks. Bitcoin, for example, is issued by a private company and is a digital asset only. This means there is no physical form of a crypto coin like the banknotes that we have for the euro. Hence, we cannot carry a crypto coin with us in our physical wallet, but we have it stored in a virtual wallet. This is similar to our bank account, but the difference is these coins cannot be withdrawn like cash in a physical form. In the same manner as we must open a bank account for our physical money, we need to create a digital wallet where we can store our coins in an electronic form on a decentralized blockchain. Decentralized means there is no single centralized authority managing and issuing crypto coins. Countries like the US and China are already exploring the field of digital currencies managed and issued by central banks, and Europe is doing the same. The European Central Bank launched a 2-year investigation phase into the possibility of a digital euro. This investigation phase started in October 2021. In this phase, they are trying to determine how the digital euro should be best implemented and managed by the ECB and what this should look like. After this 2-year period, the ECB will provide their results. It is important to note that the digital euro the ECB is talking about can be described as a central bank digital currency. We will explain what this means more closely later in this video and how this kind of digital euro is harmful to society as a whole. At this point in time, our money is managed and issued by the central bank. The ECB decides how much money will be printed and what the value of the euro is supposed to be. Talking about a centralized monetary system such as the euro is managed and issued by one central institution, the ECB. Of course, in a digital world, the ECB still wants to maintain its monopoly of managing our monetary reserves. And with new players entering the market with their crypto coins, the ECB will need to come up with a plan of what their digital euro will look like. So let's recap. We have cash in the form of physical banknotes, we have the digital or electronic euro on our bank account, and there are cryptocurrencies, also referred to as crypto coins, that are not managed by the central banks but are located on a decentralized blockchain. The ECB is the institution that controls the euro today. Our world is transitioning more and more into a digital and a decentralized form, and there are other players entering the scene with their cryptocurrencies. The ECB needs to act to come up with a plan to maintain its monopoly of managing the euro. Although the 2-year period is not over yet, the ECB has shared their rationale of a digital euro and what their plans might look like. The ECB states that with introducing a so-called digital euro, they do not want to replace cash. Banknotes are supposed to exist alongside the digital euro. The ECB also mentions that the digital euro is not expected to be a crypto coin. Hence, the digital euro will not be stored on a decentralized blockchain, but fully managed centrally by the ECB. We read through the ECB's studies and communication papers, arriving at the following conclusion. If the ECB really wants to keep cash alongside the digital form of the euro, we do not see a big difference in the situation that we are in today. Today, we have banknotes in our wallets and electronic money in our bank accounts. We have the option to pay either cash or cashless. If the ECB doesn't want to get rid of banknotes, what's the difference? Next to our bank accounts at a commercial bank, we might need to open another bank account directly at the ECB for having access to the digital euro, as it will be managed and issued by the ECB. This would be another form of bank account for storing our electronic money under the purview of the ECB. From a user perspective, there will not be a big change at the very beginning of the launch of the digital euro. But launching a digital central bank currency next to our cash might only be the first step of the ECB's secret plan. It seems that the ECB is at least entertaining the idea of getting rid of cash, and this might be a trial run. What their rationale behind getting rid of cash is will be followed up when we talk about the perils of the central bank digital currency. If the ECB would outright tell the people, "We want to take away your cash," the people would revolt right away. Especially in German-speaking countries, people are still very used to paying in cash. People we talked to about the risks of a central bank digital currency said the cash still gives them a sense of control over their money spending, and they could not imagine getting rid of cash. During the COVID crisis, people were asked to limit their cash payments and use card payments instead. Even in countries that are using cash more than others, people get more and more used to paying cashless. Let's now look a bit more into the problems that we see coming with the digital euro managed by the central bank. If there is no alternative payment method available other than the digital euro managed by the ECB, people are fully dependent on the ECB when it comes to spending their money. In the future, we all might have a bank account with the ECB to access the ECB's digital euro. Imagine, banknotes do not exist anymore, and you can only pay with the digital euro. As the digital euro will not be decentralized, all our digital wallets will be managed and controlled by the ECB. Full control by one centralized institution is very dangerous for society's freedom. Imagine, for whatever reason, you didn't pay your taxes on time, or you're acting in a way that is not in line with the institution's moral codex. The ECB can easily press one button and freeze your assets until the institution deems them movable again. You think this sounds too unrealistic? Well, if we have a look at the Russia-Ukraine conflict, this has already become real. If the ECB has full control over our money and full transparency, they can dictate our investment behavior and punish the outliers. If there is no cash anymore and we have a digital euro managed by the ECB, all our money will be in the hands of one single institution. Hence, they can impose their rules on our money. They can, for example, define the digital euro with a cap. They could say that we are not allowed to have more than 10,000 euros in our accounts in order to make sure our money will be reinvested in the markets. A central bank digital currency would swing the information power in favor of the institution controlling it. Central banks could govern with whom we interact, for which companies we work, and for what we should and should not buy. The role of the ECB is to keep the inflation rate at a stable 2% and control the money supply. That's all. With the digital euro in the proposed form, we would give the ECB unrivaled power in history. The money European citizens are using is provided and managed by commercial banks. We cannot have a commercial bank account with the ECB. A central bank digital currency would change the ECB's role dramatically, and European citizens would interact directly with the ECB. This would empower the ECB even more and reduce the power of European commercial banks. It would also cement the ECB's monopoly of controlling the money supply in Europe. Technically, it would be feasible that the ECB manages basic banking offers for its customers. This could make retail banking as we know it obsolete. It could be the case that retail banks would only offer more sophisticated finance products, and the ECB would cover the basic services. If we all have a bank account directly with the ECB, they will be able to monitor our transactions and hence gather more personal consumer data about European citizens. Digitization makes it possible for a central bank to open and manage millions of individual citizens' accounts, thus serving as a deposit bank. This will allow the ECB to gather even more data. Regulators and governing bodies tend to claim that they need to have more information about the people to prevent money laundering. This statement has been used many times to excuse the immense privacy deterioration. Even looking at the official numbers from the EU themselves, only about 1.5% of all transactions in the EU might be subject to money laundering. The EU themselves can't be sure about those figures. The needs of the many outweigh the needs of the few. This statement doesn't seem to be the case for the EU. Rather than protecting the rights of privacy, they seem to take more and more rights from the majority to punish a small minority. We are of course not endorsing money laundering, but there needs to be a better way than what the EU is doing. Power tends to corrupt, and absolute power corrupts absolutely. Great men are almost always bad men, even when they exercise influence and not authority. Still more when you add the tendency or the certainty of corruption by authority. There is no worse heresy than the office that sanctifies the holder of it. Let's be honest with ourselves. If the state has the option to watch you all the time, it will. What we are currently seeing in the market is the trend towards a more decentralized monetary system. Decentralized crypto coins are entering the market and will have a huge impact on our monetary system, which will shift from centralized to decentralized. So why should we go back and give all the power to only one single institution? Throughout the years, we were hit by several crises, and we saw the political elite were not able to handle the crises we were facing. Why should we let them solely decide how our future will look like? On the 31st of March, the EU Committee voted to ban non-hosted crypto wallets. What does this mean? In essence, private crypto wallets of citizens are not illegal only if you keep your crypto coins on an exchange that shows the EU every transaction conducted. Think about it like this. You're walking down the street and are stopped by the police to show them your wallet so they can check to see how much money you have. After that, you go shopping and pay for stuff, but the police are still there looking over your shoulder to see what you buy. Is this the end of monetary policy as we know it? Normally, you have the right to have a private life, but that ends with this law. This act clearly demonstrates that European governing bodies see the new world of crypto coins and decentralized monetary systems as a huge threat to their monopoly. They will try their best to slow down the financial revolution coming from the crypto space. This behavior clearly shows the grim future we are looking at with their plans for the digital euro. As always, do your own research, keep your eyes open, and think critically. Please also share your opinion with us and where you see the danger of the digital euro managed and issued by the central bank. Please like, subscribe, and thank you for watching.